This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Monday, July 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at September corn down 12 1/4 at 408. August soybeans are down 18 3/4 at 1036 3/4. And September Chicago wheat was down 12 1/4 at 544 1/2. No export sales announcements here this morning, guys. So we'll jump right in. Hope everybody had a nice extended weekend. I guess as we start, to say we're disappointed in what came out of the rally in Iowa, I guess would be an understatement. Nothing that really got our markets excited. Still got good weather for majority of the Corn Belt. We had some rains roll through northern Illinois that were much needed here in the last 24 hours. And I guess we did get the bill signed. So they're now it'll be digging in, devil in the details. I think there was some good things on the backstop programs for our markets, for our sector, I should say. In 26, the feedstock deal for biofuel production, must be produced in the U.S. in order to receive the tax credits. I guess that's a big deal. We've talked ad nauseum about that. So I guess with that, Justin, maybe kick us off with a few thoughts in your mind here as we start the week, and then we'll throw around the room.
Yeah, I mean, there was nothing, we had a big short cover rally going into that, Trump speech in Iowa. And kind of hesitant going into it that there's going to be all these major trade deal announcements. Obviously, we have this week we have the deadline for, when these countries are supposed to have deals done with the U.S. as far as tariffs are concerned. So obviously there was some, I think short covering going into it, not knowing what to expect. Maybe there's going to be a China announcement, maybe an India announcement, et cetera, et cetera. Really nothing in that speech. Talked about, Taiwan, some things that we already knew. And then the weather is just too good. We keep adding rain. The European model seems to keep it kind of hotter and drier. Always 14 days out, and then we get there and rain comes in. So actually the GFS has been more accurate. So like we talked about, until there's a good catalyst, it's just tough right here. The weather's too good, and the funds are in the driver's seat right now. We made contract lows last week, had a short cover rally, and on kind of light volume, we're almost right back down to where we started the rally from. So, yeah, I hate to be a Debbie Downer, but there's just nothing, until we can get a solid catalyst or something, it's going to be hard to shift direction, I think.
Yeah. Dustin, give us a few thoughts here.
Yeah, I think, it was like the second largest rally of the 2025 contract last week, right? We had huge enthusiasm. It's almost worse now. Like that was the trade deal, right? It was nothing. So, when you look at like, well, what does an above trend line yield mean? It could mean that we're left with well north of a 2 billion bushel carryout for corn pretty easily, especially if we're not getting the export numbers that the WASDE have kind of, I think, enthusiastically written down for corn. That number could easily be a little too high. They did that in the, in the May WASDE release, which was a couple 100 million bushels higher than what they had in the Feb outlook for them. And then we had, of course, huge South American safrinha crop that we're going to be competing with this whole way too. So it's capable of being a big carry out. I think that probably means a lot for the spreads if we keep getting this weather. If we are above trend line in the end. What does it mean for flat price? That's anyone's guess because we still have to think about the weak dollar index. The weak dollar is the kind of the tide that's all ships. So we have multi-year lows in the dollar that I think will encourage that flat price to be somewhat supported. Now we also have this bill being signed where it basically everyone with a base acre of corn has a fairly strong floor in place because they get the higher of PLC or Art County. Someone's not getting the best weather. Art County is probably going to be the first to kick in. But it doesn't matter if we have a 190 national yield. PLC is going to provide that floor for the market in year average. Now, I think this is where when we get into the technicals of what that means, that's going to be a little bit more difficult because there's going to be a ton of people that are going to be dumping excess corn at harvest if we have a record crop. But the marketing year average is set all the way through the marketing year. So if there's one of those years like a 2014 or 2016 where you have a sharp dive down right around harvest time frame and you're liquidating the majority of your crop, you might not match up to what the average price is, especially if there's any sort of weather problem in Brazil next year. So, obviously working with your advisor, determining like what kind of a baseline can we expect from the farm bill coverage that you have. That's still something we're going to have to work out in the details, but I do want to kind of keep that in the back of our mind. Those that have excessive insurance policies, now we have this farm bill coverage. Those are the things I think we're going to want to probably have to make sure we hang our hat on in the end.
Yeah, like Dustin, I was thinking, this weekend too, like if you're in these areas that got really good rains and you're looking really good, I mean, probably looking at selling your excess bushels above crop insurance probably makes a lot of sense. I mean, there's a lot of corn starting to tassel now. Certainly between now and the next week. I think we're probably, let's say northern Illinois into Dubuque, like maybe 10%. So if you caught a good rain, you're looking really good. And even if you have a 90 or 95% policy, probably, looking at selling the carry on some excess bushels might make sense.
Yeah. Yep. For sure. Yeah. I think you're just getting, sometimes it's interesting about when we use a matrix is like things that you wouldn't expect it to look like, right? When you start to type in these higher end yields and how that relates, they also make some assumptions about higher end yields for the county as well. And then just see what that means for you with testing different strategies, because that probably is a great strategy, right? Selling the excess bushels, see how that looks. Sometimes it might be, other things that are more quantitative too. Like there's a lot of different things that it could be in the end. So, but I like that strategy for sure.
Yeah.
Ben, what's on your mind?
I think that we're in a place where we're realizing we got a pretty big crop, and leading up till now, it would have been really nice to have some positive trade deals and news. And I think we're slowly moving into a point where it's going to be a necessity. There was an announcement this morning at the next 48 hours, there's going to be multiple trade deals that will be released. So, hopefully there's something in there, but I think that we need it. It's not just a thing that we can have a really bullish market. I think we need it maybe to stop the big bleed lower. Markets look really pretty good the last couple of days before the holiday. Not uncommon to have that kind of a rally. Heading into a long weekend, a short grease covering fire. But they definitely look vulnerable to maybe some more short covering, and taking it all out on a Sunday night feels pretty bad. This is a place on both corn and beans where they need to catch. They need to find some footing or new lows. And, new lows is typically, you can expect at least another 2 to 3% decline from those lows. So Yeah, I think we're moving to a point where trade deals become a necessity, not really a perk or an additive.
Very good.
Yeah,
Ryan,
I just added that, Ben.
Go ahead.
Like, devil's advocate to my previous statement, is that, there's a lot of commentary over the weekend of a, 186 type yield for corn. And we're talking 7 bushels over a record on July 7th, and that's, based on crop conditions, which I think crop conditions it's a joke to try to tie a yield to crop conditions, because we've seen bad crop conditions with record yields and good crop conditions with not so good yields. So that being said, there's a lot of good looking crops. But it's a good point that it always feels pretty gloom and doom when you're making contract lows, so we kind of had this, to Dustin's point, euphoria going into it, into Thursday, and then to get, whacked, kind of on the head on, Sunday night feels pretty bad. And there's a lot of numbers floating around with, we're kind of in the who can write down a bigger yield season right now. So it is July 7th. We haven't even pollinated yet, and we're writing down record yields. I mean, I saw people writing down 54 bushel bean yields, which, I mean, that's even more ridiculous. I mean, you couldn't tell. I couldn't look at a bean field and tell you within 20 bushels what it's going to be today. So to try to guess the national yield is pretty silly. But here we are. So
it highlights the the fact as like we've been talking about, it feels the worst at the low and it feels the best at the high. And to be honest, I'll just talking with everybody, there was an optimism leaving on Wednesday or Thursday last week.
Oh yeah.
And waking up, or yesterday morning, there was an anxiety about how we were going to open, because it didn't feel good.
Well, he did say I have some exciting things to say about trade. So
Right.
Why would you have that? I mean,
I know. I'm with you. And he just recently put a truth out that I think by this afternoon, I think there's letters going out to a number of different countries on what the tariff deal is going to be. And then there's supposedly a couple of extensions to August 1st for a couple of partners that have been, I guess, faithful negotiators. So we're still left with just a goofball type of whipsaw going on. I don't know what to put on that and then say about that.
Yeah, I'd say that the renewable diesel feedstock having to be U.S., Canada, or Mexico, I think is going to be a, underpinning positive. Long story, not a short story. Obviously, we were looking for a China deal, India deal, some major country deal was the hope. We didn't get that, so we'll see. I still think the renewable diesel story is going to be a bigger story going forward. But right now, it's just the weather's too good, and I think we're let down by lack of other deals. So,
yeah, well, very good. Appreciate those that input, guys. Ryan, let's talk about livestock here a little bit. Cash ended up nearly unchanged from last week, which was interesting to see, and it seems like this morning packer margins are starting to come to the forefront in terms of how that's going to relate to the kill. And looking at hogs, it was just an ugly week for hogs. No other way to put it. So I guess give us a few thoughts as we start the week.
Well, it was a firm close, kind of coming into the long holiday weekend. But yeah, I mean, like you said, it seemed like cash market just held up a lot better than I think everybody was expecting. But on the other hand, coming into the day, choice beef prices is down $5. So I think there's a little bit of concern here that, seasonally things could be going a different direction. I mean, we already have the discount priced on the board, and I think just kind of how it went last time, it seems like the futures are just going to slowly climb up to meet wherever that cash market wants to settle. We did see a little bit of light trade in the Kansas between 219 to 229, and then in the north 368 to 370. So I mean, like, there is still kind of that weaker tone. I mean, it's not higher, but it's just kind of steadyish. So I think you can get kind of a two-sided trade here. We do know the border is starting to open up here to Mexican feeder imports. So I think the market's kind of tried to figure out how exactly that's going to go, but it seems like there's just a lot more cautious optimism I think that things aren't just going to totally fall apart once we're fully reopened in the next several weeks here. So, I mean, you've got kind of the seasonal pressure that everybody's kind of worried about cutout, and packer margins overall. So I think that's really going to be a lot of the focus here right now, is the direction of beef kind of as we go into next week. So that's what we're going to be watching. And then on the hog side of things, just kind of trending lower. I mean, we coming up on the 50-day moving average. I mean, there really isn't that great of a news. I mean, cash was relatively firm last week, but still, you were down $1.85 on Thursday. Cutout was down a little bit, and we've seen just, a pretty substantial move here. Just overall in cutout. So it does seem like we're kind of running into just some seasonal pressure there. Overall, just feels like we're going to be focused on the Labor Day demand kind of coming up here in the tail end of the summer here. But overall, the direction's been pretty soft, I think, overall in the hog market. So still, once again, just watching cutout, kind of see how that shapes up to start the week.
Very good. Appreciate the update there, Ron. Just came into the open here. We got September corn down 11.5. 409 is the last there in the corn. August soybeans down 17 3/4. 1037.5 is the last. And September Chicago wheat's down 13 1/4 at 543 3/4. This afternoon, later this afternoon, we'll get crop conditions. That'll be 3:00 Central. We'll take a look, talk about those in our evening commentaries. Certainly visit about it tomorrow morning in the war room. Also, our thoughts are with everybody in Texas. Those terrible floods that are going on. Just a terribly tragic event that took place. It was taking place, I should say. So we continue to keep them in our thoughts down there. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show there. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.